Financial Argument. Follow us on YouTube.
Hey everyone, this is Elijah Johnson with FinanceAndLiberty.com, and back with us today is Greg Manarino from TradersChoice.net. Greg, thank you so much for joining us today.
Thanks for having me again. I appreciate it.
All right, well, I'd first like to discuss a little bit about the stock market. You have recently stated that a stock market crash is ahead. Did you want to discuss a little bit about when you see this happening and why?
Absolutely. I've kind of redefined this. It's not really a crash. It's a correction. What do we understand is happening right now? Again, we have an environment of maximum distortions in this market. Every single asset class, there is no price discovery mechanism behind anything at this particular time, and it's simply because of the action of world central banks, none more so than the Federal Reserve, who continues to maintain their emergency monetary policy. This is their words, not mine. Emergency monetary policy. They continue to artificially suppress interest rates, they refuse to allow the free market to determine fair value for debt. The Federal Reserve continues to foster this environment of risk, which has caused incredible capital misallocation, malinvestment, and again, an environment where the issue is simply this: there's no asset, nothing, whether it's a house, whether it's precious metals, whether it's debt, or any possible thing you can come up with, has a real mechanism behind that determines fair value. And there's going to be, again, there's no way out of this. The world central banks have proven one thing: they can continue to distort asset prices way beyond where anyone thought this would be possible, myself included. So all we need to be mindful of is this: the entire environment is not sustainable. And I think people are understanding that. I mean, even on the mainstream, they're like, well, what's going on here? We continue to get bad economic news and the market goes higher. This recent jobs report we had, absolutely abysmal. In a real market, we'd be down hundreds of points. But in this market of, again, engineered risk and a runaway central bank, the market goes higher. And all this is doing is magnifying the underlying problem, which is simply, again, these distortions in this market that have truly reached epic proportions.
Now, do you see the coming stock market crash being as bad as it was in 2000 and 2008?
Again, this is really the perspective is this: people need to stop thinking of this as a crash. It's a correction. So if we have if you want to just focus here on the stock market, which has clearly been reinflated on the back of an epic debt bubble. We've never seen anything like it in the history of the world. So again, with all of these distortions in this market, this will correct to fair value at one point. I have no doubt about it. Again, the free market is not being allowed to determine fair value for assets. It's been taken over by world central banks, none more so than the Federal Reserve, who has created, again, capital malinvestment across the spectrum here, and this will correct to fair value. When I really am at an absolute loss for this at this point. The market is so dependent now on the Federal Reserve continuing to artificially suppress interest rates. There's no way there's going to be a June rate hike, probably no July rate hike either. The market knows it. The Federal Reserve, they have no credibility left at all, and the market is starting to laugh at the Federal Reserve. Whenever any of them come out talking from the standpoint of being hawks, the market will laugh. And again, the market knows where we're at. Can't stop. I've been saying this for years. The Federal Reserve cannot stop what they're doing. They're going to continue to inflate and inflate and inflate. This is the end stage. How long will this end stage go? Who knows? All we know is that it will end, and it will end terribly when this correction occurs.
I guess, did you want to expand on what impact Fed rate hike might have on all of this?
Well, absolutely. So what do we, if and when the Federal Reserve does actually do something and raises the federal funds rate, that will affect the yield curve. It's something I've been talking about for quite a long time. The short end of the yield curve will rise. This will flatten the yield curve. It's already flattening. We're seeing this phenomenon occur. I did a whole video about it recently where I actually showed a chart of it on my blog. So the yield curve will flatten out here. Who would want to hold debt? You got to be crazy to hold debt at this point. As a matter of fact, the German 10-year Bund today hit 0.04. 0.04. Who in your right mind would want to hold that? You got to be nuts. Who would want to hold debt here? Any government debt here? If you wanted to go, if you're looking for yield in the form of holding debt, you can own corporate debt. I mean, you got to be nuts. This whole issue here of holding government debt is insane. Look, the bottom line is this: world central banks have dictated to the world that the debt is no good. And how do we know that? Again, negative interest rates in certain parts of the world, suppressed interest rate here. They're telling us, look, it's worthless. It's negative. So why would you want to hold this? We have to be at the end stage here. Are they going to go deeper into negative territory? Probably. Again, the system was not ever meant to function this way, upside down, with negative interest rates, with a interest rate suppression cycle by the Federal Reserve, unlike anything we've ever seen. How long will it go? Who knows? It's the same analogy as a capsized ship, which will float for quite a while before it goes down. That's what's going on here. There is no doubt in my mind that we are a system on life support that has been going on for quite a while, being propped up by runaway central banks who are going to continue to inflate and inflate and inflate. They cannot stop. So in the longer run, we simply know what we need to do. And I've been saying this since day one: become your own central bank, bet against this debt, because they're going to hyperinflate it even bigger than it is. And the correction because of this is going to be even more dramatic, and is going to wipe out the savings and 401k plans of all the euphoric people right now that are enjoying what the Federal Reserve is doing. Again, Elijah, this is the illusion of the stock market, which must be kept real. We already understand here in the United States we have an economy going nowhere. We're currently existing in an environment we have not seen in over 80 years. That is a sub 3% economic growth for a president's entire tenure. The last time we saw this was Herbert Hoover over 80 years ago. So I call him Hoover-Obama. Hoover-Obama has, again, under his watch, we have more American citizens receiving public assistance than in history. We're a welfare state. We are a nanny state going nowhere. Meanwhile, the stock market is at a very near all-time record highs. Does it make any sense to you? I don't think it does. It shouldn't make sense to anybody that's listening to this. It's insane. But again, we're going to see, I think at least here, this get worse before it gets better.
Now, mentioning about how, under Obama's administration, the economy has not done very well, I was wondering, with so much of the presidential election in the news right now, do you see whoever gets in office, do you see anything changing and affecting the economy for the better or not?
It doesn't matter. It doesn't matter at all. We look, the whole thing is being run by world central banks. Doesn't matter who sits in a chair in a nice white building. Don't matter. I don't care what they do. I don't care what policies they try to come up with. The debt expansion cycle is hitting a critical mass. They can't stop it. So that's really it. I don't care who is again sitting in that nice chair in that White House. Won't make any difference whatsoever. We are way beyond the point of no return. We cannot fix this. There's no way out of it. Again, what are they going to do? If anyone could come up with a logical explanation, they're not going to reinstate any type of a gold standard. Why would they not do that? Well, because it would take away the product of world central banks. The product of world central banks is debt, period. They have no other tools other than issuing more debt, and they will not give up control. They won't do it. So just referring back to what you had asked a while back, the 2008 event was nothing. We are going to experience a correction to fair value, because that's what was happening last time, the same thing. It really wasn't a crash. It was a correction to fair value, which they will not allow to happen. And when this, again, correction to fair value happens, doesn't matter who's sitting in the White House, it's going to happen at one particular time. Who knows when, but it's going to happen. And again, no bearing whatsoever on what political party is sitting in the White House.
Now, I'd like to get back to the markets. Now, you were recently talking about how paying attention to the bond market is so important, and how if you really pay attention to the bond market, it gives you the big picture of what's happening elsewhere. Did you want to discuss a little bit about that?
Sure, absolutely. Well, what do we know? The debt market, again, the largest part of this market, this is the part of the market that world central banks are manipulating. So because of that, again, nothing else is real. There's no price discovery mechanism whatsoever behind any other asset. So what we got to keep our eye on now is the yield curve, this flattening yield curve. The Federal Reserve is well aware of this. If they decide at one point here, who knows when that'll be, to raise the federal funds rate, that's going to affect the short end of the curve. We'll see this yield curve flatten out. Now, what's interesting about this particular pattern here is we've seen it twice before. This flattening out yield curve at the top of the dot-com bubble. We saw the same thing at the 2008 bubble, and we're starting to see it again now. That doesn't mean that tomorrow, the next day, next week, or even next month, that this whole thing is going to roll over, but we need to watch it. Watch that yield curve. The yield curve, again, is just so important. And if you want, again, just to put a perspective on it, and like I said earlier here, why would any rational person or institution want to hold a government bond that is paying less than most dividend paying stocks or most corporate debt will pay you? It doesn't make sense. It's upside down. It's very, it's a safe haven. Maybe people feel it's just so safe that they need to hold it. You got to be kidding me. Makes no sense whatsoever. But again, it's going to play on the stock market. There's nowhere else to go at this point. This is the environment that has been created on purpose by these world central banks. They want to create the environment of risk. So people need to be putting their cash into the stock market. Again, that's being inflated on the back of a debt bubble. This will correct, Elijah. It's a mathematical certainty. And again, we have to be close to it. Whether close, what does that mean? A month, a year? Who knows? I don't know when it's going to be, because again, what have world central banks proven? They've proven that they can be pretty darn crafty. They've proven that they can do things that are absolutely incredible to try to keep the system going, to keep the system propped up there. You know, we have companies right now that are quote unquote spinning off assets or selling them to buy back their own stock to keep the market propped up. They're not investing capital in their businesses to grow them. No, they're buying back shares of stock. How far can all of this go? I don't know. I wish I had an answer. But again, going back to the yield curve is telling us something. We've seen this before. When we have this flattening yield curve, it usually is a bad omen for what is coming and not too far off.
If we could, I'd like to just discuss a little bit about how even right now it seems like the economy is not doing very well. You've recently talked about how we're seeing the labor participation rate at a 30. I heard it was at a near 38-year low, and also that this earnings season is the worst earnings season in 7 years. Did you want to discuss a little bit about how even though you're saying that it looks like in the future we're going to see this big economic crash, even right now the economy is not doing very good?
No, it hasn't been doing good since forever. Again, we're in over 80 years, we haven't seen what we're seeing now. A sub 3% economic growth for our president's entire tenure. And you're right, labor force participation rate 40-year low. We have more people out of the workforce in history. We have more Americans on public assistance than in history. We have a real unemployment rate at Great Depression levels. We have a money velocity at a near historic low. I mean, you could go on and on here. And yes, the earnings season, absolutely abysmal. But how are they keeping their stocks propped up? These companies are buying back shares of their own stock. It's not going to stop. And I have no doubt that those secret meetings that were held between the White House, you remember last month or what it was, or a month before that, there were 6 of them. We're not allowed to know what was talked about there, but between the Federal Reserve and the White House was to how can they keep the cycle propped up? We're in a presidential election cycle. They're going to keep the market higher by any and all means necessary, and things that we can't think of, even believe. I mean, what they did recently with crude oil was incredible. Engineering, disasters, speculation in this market. It's all fake. They had to prop crude oil back up because it would pull the stock market with it. And that's exactly what continues to go on now. So they will engage in overt and covert criminal activity to keep this market propped up. They will be advising companies to borrow cash from the Federal Reserve if they need to buy back shares of stock, spin off or sell assets to buy back shares of stock, whatever they need to do to keep this market higher. The illusion must be kept real of the stock market in the eyes of the general population, because the general population only knows one thing, and that is, what is the stock market doing? Is more specifically, what is the Dow Jones Industrial Average doing? If they see the Dow Jones Industrial Average going up or being high where it is, they think the economy is doing good. They don't pay any attention to anything else. This is how dumbed down they are, purposely. So we can rest assured that this is the scenario that is going to continue here. I would be absolutely shocked beyond measure if the Federal Reserve would raise rates before these elections. I don't think it's happening. They are going to do whatever they can to keep the illusion of the stock market real.
All right. Well, before we let you go, I just wanted to touch on one last subject. On your video blog, you often discuss about the precious metal markets. I guess, what do you see happening in the precious metal markets right now?
Well, obviously, if we're talking about the paper derivative market, which everything kind of prices off of, we know it's not real. We understand what's going on. Everybody knows what's going on here. Still, we've seen an incredible run with regard to gold and silver since the beginning of the year. And we just need to understand look, if you're holding a precious metals right now, this is not a trade. This is a way to bet against the debt to become your own central bank. This is why we're holding these things. We all realize, any of us with one functioning brain cell can see that world central banks will continue to inflate and inflate and inflate. They can't stop doing this. They will continue to print cash out of thin air and buy debt with it to keep interest rates suppressed. This is how the Federal Reserve does it. So anyone that believes that quantitative easing has stopped is delusional. It never stopped. The Federal Reserve is not magical. They can't just say, hey, let's keep rates low today. They have to print cash out of thin air and buy bonds with it. QE is continuing. And again, it will not stop. They can't stop. This is the mechanism of the debt-based economic model. It must have cash or debt borrowed into existence in perpetuity, So understanding that it's not sustainable, that this debt bubble is not sustainable, and everything else linked to it is not sustainable, we will get a massive correction to fair value, which again will feel like a crash, but it won't be. It's simply the market doing its sole job, and that is to determine fair value.
All right. Well, Greg Manarino, thank you so much for joining us today. Before we let you go, did you want to share with the viewers any last thoughts you had and where they can find you online?
Absolutely. All my newest work is published right on my website, traderschoice.net. I still have my YouTube channel, but all my new videos are posted directly to my website, traderschoice.net. A lot of cool stuff there, lots of free stuff there too. Take advantage of it. And that's pretty much it.
Great. Once again, Greg, thank you so much for your time.
Thank you for having me.
This video